Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. The Australian dollar is expected to continue to hold within the current bear phase and remain focused on the 76.40 support level, even though we did see it briefly contested yesterday. Today we have the announcement of the RBA monetary policy meeting and the RBA rate statement. It is unlikely there will be any interest rate change as rates remain at historic lows of 1.5%. However, the RBA rate statement will be the one that the market will be keen to see how the market will view the bank, whether it's hawkish or dovish to its statement. Measuring the technical implications though, we are a little bit to a bullish phase, and I do expect to see any advances towards 77.05 to 45.55 to foul, and eventually see the market turn back to the downside and reassess from there. The euro dollar remains unchanged since Friday's trading session, even though we did witness a short sell-off overnight to a low of 115.79 before rebounding back to 116. Currently, I do expect to see any advances towards 116.40 to 117.0515 to foul. And it's just a matter of time until we see this market eventually break down and take the challenge to 115.5, which may extend lower to 114.70.75. The dollar yen case clearly rejected the challenge at 114.55 after briefly printing a high of 114.73. From the rejection, now questions whether we've seen a short-term peak and could look for a next move to 113.50. My strategy is still to buy on dips, but not from 113.50, but more to 112.80 and see a rebound from there and eventually take out the top side and head towards 116. Surprisingly, the British pound was firmer overnight after erasing a lot of its losses from Friday. However, I'm still a little bit on the cautious side and remain neutral for the short term. Purely for the fact is that the Bank of England did hike rates last week, but gave it a more of a dovish statement to imply that the one and done rate hike is now out of the way. Due to the uncertainty of Brexit, could actually see a bit of a stall now to the next potential rate hike coming forward. So the strategy is to wait off and wait for better levels. The indicators aren't fully supportive of this rally overnight, as you can see here. So it most probably will continue to be noise and trade in a whipsaw manner. So I'd rather sit out for the moment until better levels and direction comes from the technical implications. My view on gold was to buy on dips, and you can clearly see from that trend line that comes down here is that the market held above there on the closes and rebounds very aggressively to rally to a $16 move from the lows of 12.66 to a high of 12.82. Currently, I do expect to see further tests to take out the 83 resistance and move on towards 88.90 and reassess from there. Any dips now should find support at 76. And to wrap up with oil, well, the market is completely ignoring the technical overbought condition and instead surges higher and now ready to take on the challenge at $58 a barrel. As it rallies more than 3% overnight, I do question whether we can sustain. Now we're getting very close towards this region after taking out the recent highs around late 2016 to January 2017. I'll be looking to see how it plays towards the early 2015 level, which is from around 58 to 62. I am not a buyer up here. I believe the market will reject anywhere around this region. So just be on your guard if you are trading from a long side. So that wraps up my daily video. Thank you very much for joining me, and I hope you have a wonderful day that's ahead.